Hello and good afternoon. I'm Rachel reporting live from Kalkine Studios. This is the Midmarket Pulse. Now, Australian shares continue to trade higher in afternoon trade as easing concerns around the Omicron variant of the coronavirus did boost market sentiments. Travel stocks are among the biggest gainers on this positive news, with a concern about new lockdowns from the new COVID-19 strain limited. Investors are keeping an eye on the Reserve Bank's monthly policy announcement set to be released later today. The RBA is widely expected to keep the cash rate unchanged at the record low of 0.1%, while it's also seeing continuing its bonds buying program at the rate of $4 billion per week until at least mid-February next year. Let's take a look at today's figures. By afternoon trade, the ASX 300 index was up by 43.1 points or 0.59%. The benchmark index opened higher today, rising as much as 0.9% in an opening deal, following strong cues from US and European markets. On the sectoral front, 9 of 11 sectors are trading in the green, led by consumer discretionary, which rose 1.3% so far today. The consumer discretionary sector was followed by a 1% gain in tech, which saw a surge in buying following strong cues from its US counterpart, the Nasdaq. Amongst others, REITs, industrials, healthcare, energy, consumer staples and financial sectors also witnessed a spurt in buying activity. Meanwhile, the utilities sector is the worst performer so far today, with a 0.44% loss, followed by materials, which dropped 0.3%, owing to a retreat in commodity prices. The top gainer on the ASX pack was corporate bookmaker PointsBet. Their shares surged 7.2% so far today. Some of the other top performers were buy now, pay later business Zip, travel services provider Corporate Travel Management, insurance and banking business the Bank of Queensland, and Australia's largest retail travel outlet, the Flight Centre Travel Group. On the losing side, diversified financial business Magellan Financial Group are currently topping the charts with a 3.9% loss. Some of the other top laggards are securities exchange operator ASX, healthcare business Fisher & Paykel Healthcare Corp, nickel miner Nickel Mines, and resource company Iluka Resources. Now, before we move on to other newsmakers, let's take a small break here.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the crypto buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Welcome back. This is Rachel and you're watching the Midmarket Pulse. Let's look at some stocks that created a buzz on the ASX so far today. On the initial public offering front, we have Australian software business Rocket Boots made its debut on the domestic exchange. The stock had a weak opening and was trading 10% lower than the listing price by mid-session. The shares started trading at 11 a.m. after successfully raising $4.25 million by issuing 21.25 million shares at an offer price of 20 cents per share. The company makes software products that solve fundamental problems across various business domains. Its unique software solution connects machine learning and computer vision knowledge, collecting real-world activity data, which is then utilized to reduce losses in retail, banking and other sectors. Shares of software and service business Tesserent jumped 10% after a slew of acquisition news. The company's entered into an agreement to acquire Pearson Corp for up to $28.8 million and Claricent for up to $4.1 million. The company made the acquisition by signing 2 separate share purchase agreements with the respective vendors. The tech firm will complete the transactions through both cash and shares and are expected to complete by the 31st of December. Shares in fintech major Zipco climbed 6% after they reported a monthly transaction volume that surged 52% in November versus the prior year period. Customer numbers surged 71% on the prior year to 9.2 million. Despite today's rally, Zip shares are down 18% over the past year as investors reassess the profit outlook for the buy now, pay later sector. And shares of biopharma company Neuron Pharmaceuticals zoomed 87% after they announced positive trial results for its phase 3 trial drug trofinetide for the treatment of Rett syndrome. The company says its partner in North America, Acadia Pharmaceuticals, has found positive results from the phase 3 study evaluating the efficacy and safety of trofinetide in 187 girls and young women aged between 5 and 20 years old with Rett syndrome. The development and commercialization of it in North America is fully funded by Acadia, and Neuron is eligible to receive potential milestone payments of up to $455 million. Neuron also escalated double-digit percentage royalties on net sales of trofinetide in North America. A nearly listed global equities manager, GQG Partners, traded marginally lower after they reported a drop in funds under management during the month of November. The total funds under management dipped 3.4% to $90.4 billion and $87.3 billion in November. The group didn't provide a breakdown of net gross inflows or outflows. The shares of the biggest IPO of 2021 are down 11% to $1.78 since listing in October at $2 each. Online classifieds business Car Sales saw its shares falling almost 1.5% after they reaffirmed its earning guidance for the 2022 financial year. The company has stuck to guidance for solid growth in adjusted revenue, EBITDA and NPAT in financial year 2022 at an investor day today. The company said that the financial performance will be more heavily weighted to the second half of the year due to the lockdown impact over the first half. And shares of Australian rare earths mining company Lynas Rare Earths dropped 1.6% after its chief executive Amanda Lacanes sold 200,000 shares. Well, that's all for the Midmarket Pulse today. Stay tuned to Kalkine TV. We have many more shows lined up for you with updates across the economy, markets and sectors. This is Rachel signing off for now.